Well, welcome everyone. This is Tim Boss with FinancialCyclesWeekly.com, and we do start with our disclaimer here for today as we talk about the financial markets, reminding you that you put money in the markets, that money is at risk, and you can lose money as well as make money. Having said all of that, let's move right ahead here with our next installment in our Gann Power series of videos. This is video number 3. We're talking about price and its importance in Gann trading and in your ability to get big rewards from the markets. Obviously, we are concerned about price differentials in our trading. So the last time we got together for one of our videos in this series, in our Gann Power video, we looked at the importance of time in trading. And of course, with time, what we typically do is represent that on the horizontal dimension here in our trading charts. And if we understand time, we can figure out when we can make money in the markets. That's the importance, and this is why W.D.Gann ranked time as the most important thing to understand in market analysis. We want to know when is the best time to get into a trade, when is the best time to get out of a trade, when can we cash in, so to speak. Now, of course, as we look at price, we're looking at typically the vertical axis with our trading charts, and when we connect with price, we can figure out how much money we can make in the market. So it's an interesting combination. We need to know when, but we also need to figure out how much, and the how much is often one of the biggest questions that we have in the trading dynamic. It's certainly something of interest to us. How profitable can something be? How much are we risking in entering any trading situation? Now, W.D.Gann had some amazing market insights, and of course we're doing this series of Gann Power videos here in preparation for the release and enrollment period for our Gann Plan Trading Success 102 training program, brand new program that we've got coming up here. So we want to make sure that you understand the importance of Gann techniques and the power that can be yours when you begin to engage in putting some of these methods to work in your own trading as well. Now, when W.D.Gann looked at price, he dealt with it from a number of key concepts, of key perspectives here, and we want to keep those in mind as we discuss price dynamics here briefly today. First of all, we're concerned with the highs and the lows in the market. So we talked about price lows, the times when prices reach a bottom in the trading dynamic, the price highs when they go to the other extreme, and we have a higher trading dynamic, and of course the ranges, the price ranges, are the difference between the two. So how low is the low and how high is the high? We can look at that in any time frame, by the way, and of course as we discussed time in our last video, this is one of the concerns. We understand the importance of using multiple time frames. So in the course of a single trading day, for example, we're interested not just at how the market opened, but and how what the closing price was, but what was the intraday high, the intraday low as well. So these are core considerations for us. That defines the trading range. When we're talking about price support and price resistance, it defines the limits of the trading activity for us over a period of time. Of course, Gann used price retracements in some very spectacular ways in order to analyze the potential for trading profitability over time. He also related prices to harmonic projections, and the numerical dynamics of harmonics apply a great deal to Gann analysis. It's a key tool to be aware of in using Gann, and he loved to use the price squares as well. In fact, he would do squares from lows and squares from highs and squares from trading ranges as well, and like to project this out geometrically. Now, it's interesting here, and probably we should, at this moment here, Now, it's interesting because oftentimes there's a point of confusion around this term, a price square. And a lot of people assume that what we're talking about here is multiplying the price by itself. That's how we square a number in mathematics. So the square of 2 is 4, the square of 3 is 9, that kind of thing. But that's not what Gann meant. And when he talked about and used price squares, it was literally constructing a geometric figure with 4 sides based on a particular price in the markets in order to project out the duration, the time factor, as well as the price dynamic there as well. So major price lows, whenever we have those at work here, what's going on is that these bottoms in the market are setting the stage for higher price action. We talk about a low, that means that prices are likely to go up from there, so to speak. So here's a trading chart, and what we've done here is identified 5 different trading lows over a period of time with this particular stock chart here, and we've put in the price levels at which these lows were established. And in each case, well, that's what we'll do is zoom in here a little bit. Let's take a look at this first one here. We had that low that was set at $22.37, and that provided kind of a basing factor in our overall trading chart. For the duration of this chart, which was these were weekly price bars, so it covers a period of several years here on our trading chart. And in this case, we can see here that there was a specific point at which this price occurred, and that marked the low of that entire trading time frame there as well. But the fact is that when we establish this low and just identify it, we kind of looked for the lowest price and scanned for that. We found that that was the point when, on an intraday basis, this particular stock hit that price low at that level. But we also see additional levels at which approximately the same price level was reached. And so if we find a pattern like this with repeated price lows at roughly the same price point, they're not all exact matches, but you can see from our red line across the screen there, we draw this line to represent that low for the trading of the stock. And this is something that gives us what we call price support. So whenever we have a repeated low, and this is something that Gann put a lot of attention on, then we will see that a support zone is created, and the more times that the price goes down to that level and then bounces back, then the stronger that support becomes. And that's one of the key principles in working with price in the markets, and certainly something that Gann put a great deal of emphasis on in his own work. Here is the next low here, and in this case we can see pretty clearly here that the market moved down and hit that particular point, and we don't see a whole lot of reinforcement for that unless we take a look over on the left side of the chart, and we can see here that for several times in the past, a little bit longer time frame involved here, but that support zone was being defined originally as well. And so when the price went up after that price support on the left side of the chart there, then it came back down and it hit exactly that same price level, in this case at $35.50 a share for the stock in question that we're tracking here. And so that defines for us once again that price support zone based on the trading low. Take another example here. The price had shot up considerably and then fell back pretty precipitously to hit this low at $53.15, and of course that's the point that we're tracking there with our trading chart as we see that enforced for us. And in this case we have an interesting situation because we actually had several points earlier on before the big run up in the price of the stock. It had briefly paused there and touched on that low low at 53.15. Didn't look terribly important at that point, but once we saw the big move up and the swing back down and hit that same level of price support, that's when we begin to realize how critical that can become. Now, this is a very interesting example here as well, because as we note along the way, this not only marked a couple of significant trading lows and to form that support zone, we also along the way had a couple of occasions when the price went up and then stopped at that level and actually set shorter term highs. And so this inversion there confirms for us the strength of that support zone. And this is not an uncommon phenomena in the market as we study highs and lows and look at areas of support as in this kind of example. So it's not unusual for us to sometimes see this. When that occurs, we take it as an extra level of confirmation that this particular price zone is important. Once we've set up these price support zones like this, then they become more important to us the more we trade with that particular entity, that particular stock. The price can go far away from that, and if there's a big sell-off at some future point, then we're going to be looking back to these price levels to define a limit on how low we expect the price to actually fall. So that's the usefulness of that. Now, major price highs, on the other hand, which mark market trading tops, to serve to clarify the limits of the bullish sentiment. When the bulls take over in the markets and we get a lot of positive enthusiasm going, a lot of optimism present, then stock prices can go higher and higher and higher. There's little sense of a limit to that until we begin to define some trading highs. So what we're going to do here is take this same chart we were just looking at, and what we've done now is draw in marked three critical trading highs and drawn in some green lines on the chart to indicate those as well. And in a very, very similar fashion, as we look at the highs involved here, for example, this one at $81.96 was particularly significant. And in this case, what we're seeing here, of course, is that particular date in which that occurred, but along the way we also see some additional dynamics in which price went up to that level and backed off again. And that's the critical thing as we define the trading highs in this way. So when we see that kind of phenomenon, we have a slightly different terminology for it. When it's at a low, we call it price support, and in this case we're talking about price resistance. There's a resistance to the price going any higher than that, and so that's the thing that we want to focus on there. Another example from the same trading chart, and in fact this is the right hand side of the trading chart, the more recent highs that were established for this particular stock here. We're seeing the $150 level, and this is very significant in terms of price analysis as well, simply because it's a round number, it's a significant number psychologically, and it's certainly something that would catch our attention because it takes on kind of an extra power. And what's interesting here, of course, with this is that we saw it tested, and then almost immediately there was a second test of it, so it established this resistance zone. And just like when we were looking at the price support with multiple touches to a support line, and we noted then the more times it gets hit and the price rebounds from that, in case of support, then the stronger that support zone becomes. In this case, it is what we would call the price resistance, and it's exactly the same phenomenon. The more times we hit a resistance level, the stronger it becomes. And so in this case, it's hit that, again, these are weekly bars. Over a 3-week period, we saw it hit that particular resistance zone at $150. So it's important there, but if it had more examples, then it would be an even stronger indicator. And we have another one here, that intermediate one at 137.98 that we're looking at. And in this case, we have that initial hit at that point, just shy of $138. And then subsequently, we saw price drop back considerably. It advanced and hit that point again, pull back, managed to move briefly above that between those two red arrows there on the right. But then a third time, we found that resistance zone being defined as well. So these are the ways that we look then at price resistance in some cases that is a very, very important indicator. This is something that Gann used a great deal in studying the markets, and a lot of our Gann studies focus on understanding these phenomena and then how to put them to work. Now, W.D.Gann did a lot of work with the price lows and the price highs, as we've just described here, as very critical factors in his methods of market analysis. He also looked at price ranges, which are very interesting. The price action between a price low and the price highs. So we tried to establish these, and again was a firm believer in using a long-term, as long a term as possible, maybe we should say, in terms of looking at his trading charts. So if he found a significant low that occurred some years before, that was the kind of the starting point. He would kind of gauge things on that basis. So that's something that we certainly want to pay attention to as well. But he would use the range then between the low and the high to identify the potential inflection points in between those two for his forecasts in the markets. Once we have an understanding of the low and a significant high, then we can move from there to get more information, and that's exactly what W.D.Gann did with his trading methodologies. Now, he used a number of geometric tools, a lot of which were unique to his work. He invented himself or modified other people's work in various ways to apply these tools to reveal the hidden potential of price ranges as well as the potential in the highs and lows of the market. So let's give an example here of what this looks like. Gann used the angular price divisions. He would like to divide things into certain increments. He was a big believer in the eighth harmonic, and dividing things into eighths was important to him. Sometimes he'd apply that with horizontal price lines in his charts. In other cases, he would use a tool like has come to be known as the Gann fan. I'm not sure he actually named that himself, but it was a fan-like projection, and it's been given that moniker by traders in subsequent generations since Gann's death in 1955. So again, I'm not positive that he called it a Gann fan, but that's what we call it today. But in using that, what it can do is project the potential trends and the price levels, and in this case we typically apply it based on a significant low in the market. So in this case we're using exactly the same chart we've been referring to here. That low that we were looking at earlier at 2237, that's the starting point where we project the Gann fan from there, and so it will send prices higher and lower along the way with that. And so as we look at this, then we can see very, very clearly some of these points of correspondence here. Here we have the whole trending of the market moving right along one of these Gann fan lines, which provides an ascending level of support for the price of the stock and describes that trend exactly. Now, what we're going to notice here is the farther we move away from that origin point in terms of price, then the softer the application becomes. In other words, it's a very, very powerful tool if we apply it shorter term, and we can extend it out into the distance, but notice that these lines get farther and farther apart, wider and wider difference between the two as they move forward, so we get less, or should I say fewer points of coincidence with that. Here's another one here, that high that we were describing at 81.96, again, was not, we put in that green line ourselves to mark that price level there for that high, but that high occurred precisely on a Gann fan line as well, and so it was very significant, very strong, and we saw the sharp pullback there, a tremendous amount of resistance at that particular price point, and then equally significant, maybe even more so with that, is the next increment of it, and we have that low at 53.15, and we saw the price pull back there, and of course a big rebound found from that along the way. So this is just an example of some of the tools that Gann would use in coming up with these specific projections. We can start this in. Once we've established this as a low, we may not have all this trading history in front of us. We can project these lines and then begin to define the potential trends for this market. If it complies with that, if the market behaves that way, then we have a significant indicator that can give us more confidence in our trading positions and understanding our entry points. Of course, Gann used a lot of tools. One of the most well-known, of course, is his square of 9, and this relates time and price together. It's kind of an analog computational device, and so we have that as a way of projecting prices, and it's a little hard to see on the screen, but in each one of those little boxes is a separate number indicating a price level. So if we find a price at a certain level, we can use this diagram then to see the corresponding prices that can be projected outward from that. A fascinating tool. We did kind of a deep dive in that in our Gann Plan Trading Success 101 course, which is our basic level course in Gann Trading Methodologies, and so it's an important piece of understanding Gann techniques here. So W.D.Gann also had a clear awareness of price retracements and of harmonic price projections as important factors in forecasting. We won't do a dive into those here today, but just suffice it to say that there were a lot of techniques that are used that were very, very refined in understanding and anticipating price movements and their potential in the markets as we set up trading opportunities and understand what's going on with that. Now, Gann taught that price goals in the markets cannot be reached until the relevant time cycles have reached their points of completion. This is a point that we talked about in our last video when we were looking at time. A good point to be reminded of that, because the two really do work together in doing Gann analysis. By understanding the price factors that are included in cyclic expressions, Gann was able to forecast future market prices with an amazing degree of accuracy. There are lots of stories about the forecasts that Gann would make and how the markets kind of magically behaved exactly how he said they would based on his methodologies here. So having clear and specific price expectations can give any trader, including you, an enormous advantage that can guarantee more rewarding results in the markets. That's what this is really all about. The techniques that Gann used are incredibly powerful to help you get better results from active engagement in the markets. It's an interesting study from an academic point of view, fascinating stuff to learn, but applying it is what we're really focusing on here, and that, of course, is one of the reasons we are getting ready for enrollment in our brand new course, Gann Plan Trading Success 102. We had our basic course 101 a couple of years ago, and this is 102, taking things to the next level. And a big part of this brand new training program is going to focus on Gann's understanding of price and its essential role in successful trading. So we're going to be sharing some more information as we move ahead. We're here on the new Gann course. We're getting ready to open up registration here in just a few days, so we'll be talking about when that will open up here and let you know about how to get involved with that. But for right now, just simply be kind of tuned in a little bit. Be alert for any news that you hear about market prices. Now, typically at the end of each trading day, there'll be notices on the radio or the TV shows or whatever about what the market did today, and it was up or it was down, whatever. But if you happen to hear that the market's hitting a new record high, what does that mean, really? We're talking here about that exuberance that moves us past a resistance zone, and so how does that new high relate to a major low in the same market? Can you go back and take a look at that? Interesting thing to explore a little bit, because it kind of tunes you in to some of the things that W.D.Gann was focusing on along the way. And certainly, if you have some observations and want to share them, we'd be glad to have you do so. You should find a place where you can leave leave a comment here with your email, and we're happy to get your comments along the way. Share your thoughts, share your questions. If you have ideas about Gann, questions about what we're doing here in this series of Gann videos, or observations based on your own looking at the market, I would love to hear about that along the way. So in our next video, we're going to take a look at the ways that Gann brought time and price together, very specifically through his very innovative and original use of astrology and the tools of astrology in his market analysis, his market timing, his market forecasting. And this is something that's unique to Gann's work. We're very, very excited to be able to share this information in our upcoming course. We're going to give you a preview of that in our next video. So make sure you're on our notification list for these Gann Power videos. You get an alert as soon as each video is available for viewing. We've got this one. This is number 3. We've got 2 more coming up in the series, so make sure that you get all of them. If you haven't watched the first couple of ones yet, you should see a link somewhere on the page here to get you connected with those as well. In order to get on the notification list, simply go to bit.ly/freeGannVideos. Everything is lowercase except the word Gann, G-A-N-N, is capitalized there, and that will get you connected with that. So I want to thank you for taking time to be with me here today and watching our video here. Has been taking a look at the role that price is playing here with Gann studies, with our Gann Power program here, with introducing you to some of the key concepts with W.D.Gann that make his work so unique, so powerful, and getting better trading results for you. So this is Tim Boss with FinancialCyclesWeekly.com. Thanks again for watching. We'll be talking again real soon. Our next video should be out tomorrow, I think. So keep a lookout for that, and be sure to sign up for the list here so you'll get the notice as soon as that's ready to watch. Thanks again.